Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto, and
I'm Dan Hussey.
Today, we've got some big stuff to cover. Different than normal WASDE report today. We find that we don't have anything to say about the WASDE.
A whole lot to do about nothing.
Whole lot of nothing to do about nothing, but we're not going to let that stop us from putting some content on YouTube and making producer Carter's job that much easier. Before we begin, we want to let you know that if you're interested in hearing about grain market movements and strategies to trade daily, you can sign up for the Ag Hedge Hotline hosted by expert market strategist Ted Seifert. It's totally free and gives you the chance to connect with us personally if you have any specific or general questions about the agricultural markets or agricultural commodities as a whole. If you're interested in learning more about how this price action works and how to make price action work for you, it's a perfect way to take that first step. Link is in the description below to sign up for that. Totally free, zero commitment, money back guarantee.
We might as well run through the WASDE numbers.
Get back to basics,
tell
right?
Folks why there isn't much, right, to
Get back to
dive
basics.
into there, right? U.S. ending stocks, corn, there were a little bit, a slight update there.
Which is the thing that caught my eye, right? We were looking for a higher number, and the USDA gave us
1.365 billion bushels. That comes in about 30 million below trade estimates that came with were at 1.392. This is also 50 million less than the May estimates from the USDA. So good to see that there. Soybeans and wheat, we can quickly say no change there. Month over month, 350 million bushels for soybeans and 841 for the wheat. Basically in line with trade expectations, right? You're off 5 million there. Who cares? That's nothing.
Totally fine.
And no change month over month. So what more do you want me to say, folks? Right?
for sure. Now, 25, 26, ending stocks coming down a bit in beans, right?
Right.
Going up in corn, 1.75, and coming down in beans. So
No
we
change
market-
month over month, but it was lower than trade expectations. But
Okay.
year over year, though, they're right. That 55 million reduction, year over year, that's not inconsequential. But it is remarkable to see how bearish the undertone for soybeans is, right? Finishing down almost down double digits in July, or we're down double digits in July at one point. It still can't really, muster a rally together. We're going to talk about why that might be the case, even after at face value, this report seemed to be kind of decent for the beans. I mean, nothing changing there. It didn't get any more bearish.
For sure.
But I think that also could be the reason why we're not getting excited about soybeans at this point, too.
At the 1120 bar on the chart, I noticed just before we came in here, the 1120 bar ramp up in volume. They were taking out the day's low, and I think you started to have some circulation about the Reuters headline that said, "Hey,
Yes,
your biofuel standards, your biofuel number that comes out tomorrow, allegedly comes out tomorrow, is planned to be released tomorrow. That number is not going to be what you're hoping that it's going to be." And so that may have weighed on the bean market as we
Yeah,
get into the close, right?
a lot of speculation around what that could mean for the soybean market. And I think, right, the idea here is that no news is bad news, and no good news is bad news. And that's kind of what we're seeing with soybeans. This is very hard, I think, to get excited about a market when our biggest customer has already eaten their fill, so to speak, for what expectations of their demand is for the year. We are looking at that chart, which I wish we had to put in front of you right now. Maybe we can throw it up for the thing, that chart of soybean exports, right?
Soybean
Net imports,
into China,
into China,
Into
right?
China. Big
And
number.
those aren't coming
And I'm
from
sure
us,
Many of our viewers have seen that. Reuters.
right? Right. We've all seen it if it's out there. Point being is that you look at that and the pessimism behind that chart, you think, oh, wow, insatiable demand out of China. But then you realize, wait, it's not for our stockpile of beans yet. So remains to be seen. But with all the trade talks we've seen, the news out on Friday, it's like soybeans just can't get that narrative going.
And it might have been a Mark Soderberg note today from ADM, or it could have been Hightower. I'm not sure. One of those guys, you got to double check my source on that for me. But the thought was that with those imports, you now have some distance between today and the time where the Chinese might be forced to make some sort of phase one type agreement with the Trump administration, because they simply don't need the beans today. And so they can't be forced to make an agricultural purchase agreement until maybe they have some need down the road. And so,
And if memory serves, it wasn't until that 11th hour into the fall and harvest that we got, deals formulated last time around, right?
That's a good
if I
point.
remember correctly.
that's a very good
The
point.
timing of it was much later in the year than anyone wanted it to happen. We were all betting it would, or were hopeful it would. But I think it's in China's, if you think game theory out, what's in their best interest? It's their best interest to wait as long as possible,
For sure.
hold out as long as possible to see if prices can come up. Because they can get, in theory, I think the idea is they could potentially push all the way out to our harvest time frame before having to make a decision now, if they've already eaten their fill, so to speak, of South American production.
And this chart, we sat here how many days ago speaking together, and you were above. I mean, I don't know. Do you want to dive into the technical?
Yeah, let's go.
It looks
do
to
it.
me like, we sat here.
Nothing else to say about WASDE.
Right, we got nothing to say, but we're going to start talking. We're going to keep talking anyway. This chart sat here with price action well above these moving averages just the other day. And what a difference 4 trading sessions makes.
Yep.
Back down below all those moving averages. And this recent failure to trade over or to sustain 1060 highlights the previous 2 highs that could not sustain either. And so from a strictly technical perspective, you've got a rather orderly channel that is bringing price targets down below that 1030. If you get below 1030, it's not a great technical picture. And in order to sustain trade over 1060, you're going to need basis of July. This July contract also, I think you go into first notice next week on Friday. You might want to double check that too. But the point is that this July chart is a bit long in the tooth, but it doesn't look great. And you'd hope to see something today in this report that might change that. But the bearish narrative stands, I guess I would say.
Yeah, I think there's enough worry out there, right, to keep a little bit of weight on the shoulders. You also have to point out the technical head and shoulders pattern now that's formed with the 1060 high that we just formed. That's forms a right shoulder. Neckline's still down there, like you said. That 1030 threshold gives way, and you're breaking and unwinding. The 2 previous times we broke below 1020, $10. It was good for a good 20 to 30 cent slide. And I'm pointing back to that end of year sell off in December that we had, and then that April sell off that we had in July soybeans. 2 instances where you can see how slippery the slope can become if this market wants to turn over. And not to sound, be the bear and be all pessimistic, but hey, we got to read the tape that's presented to us. It's our job to talk about the narrative that we're seeing unfold. And it's not great when even what could be construed as a decent report for soybeans, because it didn't get any worse, certainly wasn't enough to excite anybody.
For sure.
When you layer on the other news, the announcement potentially from Friday, another lack of trade deal, trade deals have been made and we haven't heard anything about agriculture, I think people are concerned. The trade is concerned. U.S. ending stocks, we got those down. I got a wheat production chart up here. I mean, that didn't change at all. So
Corn world ending stocks, notable that the trade was looking for 278.80.
Yes.
We got 275.24. That to me was not bearish. Certainly world ending stocks are showing you that maybe there isn't.
And that's a narrative we've been talking about
For sure.
Pre-WASDE, right?
For sure.
That you look globally, you take China out of the equation, it's, we're not resting on laurels
Stocks to
of
use.
huge stocks, right, globally. You're one event away from, I think, seeing $8 or $14 beans again. But we can't, unless that event and thing happens, it's status quo. Yeah. No change to the South American crop production numbers out of the USDA. That was a little bit of a surprise, I think, to most. They were expecting it to be, bumped up. Those production numbers becoming a little bit more bearish. And I think that, hey, kicking the can down the road there wasn't bullish for the soybeans, right? Everybody's still expecting it coming.
Sure.
So we just ignored that as a data point overall. Chart-wise corn, we're going to take a look there. It seems like it's a market that isn't going anywhere real quickly, but, with all of these narratives and concern we're talking about, it's impressive how December corn has held up here. And, July corn had every chance to be negative on the day and just couldn't do it.
And, if Ted was sitting here with us, what I think I heard him say was that normally you're seasonal in corn. I thought this very interesting. Normally you're seasonal in corn, you're negative seasonal, has a lot to do with the fact that they're stripping weather premium out. And we may have already pre-stripped the weather premium in corn. And so you may not see, not to say that you can't have the negative seasonal, but maybe a big component of that negativity has already been removed. And so corn may feel that, and you can't help but believe that there is a buyer. You look at the export numbers, you look at usage for ethanol, there's a buyer down here, right? And
yeah. Somebody is saying, no,
special.
420, 430 corn that's, we're not going there. This is cheap enough, right? Where we're at least for now.
Yeah.
Until they move that bid. Until the guy holding his hands up puts him down.
And then you've got some safrinha corn coming to market, but that is probably not for a little while yet.
Yeah. Still a little bit behind there. And like we said, that global balance sheet for corn says something, right? It's not, as hand to mouth as soybeans can afford to be. So we'll see. We will see. A little bit of green on the chart in the spring, but that Chicago can't get out of its own way.
Not at all.
So we live in a mansion. I know I had it.
And another market here where 4 days ago, we're sitting here above the 10 and the 18.
Right.
We're optimistic. You're looking at that thinking there's only...
there's 100 and 200 and above. Let's go hit those now,
only
right?
one way for this chart to go when we're sitting here on Friday.
Wow.
I mean, that's a breakout. Truly on Friday, that is a market that is breaking out. And then 4 trading sessions later, they have removed all of that 6-day rally. And so yet again in week, the party is canceled, at least up to this point. And that does not...
And it looks a lot like a rejection at old support,
does.
now resistance.
Not look great. It does not look great. Took out the previous high and then immediately came and took out the swing low in the next 4 days. And so you don't have to be a market wizard or chart PhD to recognize that it's bad price action in wheat.
Right.
And
it couldn't get back over levels that it had broken down below, right? I mean, that's stair-stepping lower. It's that waterfall look to a chart you hate to see.
it's not great. No. There are a lot of things going on in wheat. Weather in the United States, slowing down harvest, affecting quality.
Right, you got spring wheat that
Russia.
is maintaining a bit under it still. So
Sure.
it's
That's
not
what that
like,
chart is telling us, right? Is that domestically, your wheat in the United States is under a bit of duress.
right. And I think that there's all of these charts and markets, there's a narrative to be said after there's some form of flush out if you're just looking at price alone, right? I would at this point almost welcome that capitulating move to then finally find a bottom. We could chalk it up to seasonals. We could chalk it up to the technicals on the chart. But I also think, right, when we consider that corn chart for a moment, we are proving there's a commercial, I think, interest at these levels to some extent, right? And that's the important thing that, hey, we're in a period where there's some demand here. We were talking just basis around the country. I mean, out east, it's, things are starting to get, dire straits in some places for some corn. So it's going to be an interesting, I think, continental trade here in the U.S. to shore up some of that arbitrage, to rebalance that demand across the country, because it doesn't seem like it's in everyone's backyard right now.
For sure.
So we're going to see that southeast, Georgia, the Carolinas, that area that is short on corn, can't necessarily bring it in from South America and other places because it may not be there. That seasonally it could. That demand hopefully will drive things across the country. And hey, I don't know about you, but I shouldn't say this because it is expensive to herd up and get some cattle, but man, if more mules could get on feed too, there's a lot of things. There's a narrative there in the story that we could continue with corn, but it got to prove itself.
And the interesting thing to kind of nutshell this corn and bean market is that you have the underlying supply issue. All you need now is some sort of outside event, whether it's weather or maybe some sort of trade deal that puts a spark to this market. It certainly could happen, right? You would be remiss if you didn't consider, if you're making big sales here, if you didn't consider covering them.
Oh yeah,
you're adding more risk than you need.
It's one of those charts that seems like it's having a hard time going down. It may not be going up a lot right now, right? Which, okay, if you got to get sales done, you do. But that's exactly why, the age-old adage of don't sell a quiet market kind of comes to mind for corn right now, even though that's definitely not a reason to just buy it. But, it's feeling like we're finding more of a bottom, right? We're finding where that interest is. And if, like Joe said, the supply side is taken a bit, is accounted for, then the demand's there.
These charts don't necessarily say to buy it, but if you are having to be a cash seller, you would probably still want to be protected.
Yeah. And the rising price of oil of the last week or so doesn't hurt either. Into the summer months, so we'll see. Right? We'll see. Well, I think that about wraps up today. Thank you for joining us here at the Zaner MarketCast. If you want to get more, you can follow us along on LinkedIn and Facebook at the Zaner Group, or click that follow button right here and give us a like, a comment, or a follow not to miss a beat. We'll be back with you next week and as price action develops. Take care, everyone.
Have a great weekend.